Hi everyone, I hope you people are doing great. I am Punya Aggarwal, ACCA affiliate, and welcome to the second question of our AA Pre-December 2024 mock exam debrief. So in this video, I will be explaining you in brief about the AeroSho and company. So I hope that you're done with this question and then now you are coming here to understand if there was any query in particular question. Okay. So let's start with first reading the case study and then we'll come to the questions. So it is 1st July 2005. So dates are very important whenever we are reading any question. So please focus upon the dates also. So it is 1st July 2005. You are an audit supervisor of AeroSho and company, and you are involved in the audit of fuel tech company for the year ended 31st May 2005. So basically, our year end of the company is 31st May 2005. Hikari Fuel Tech Company, Hikari sells petrol, aviation fuel, and similar other oil-based products. One of its key customers is the government of the country it is based in. The audit work for this year is complete apart from the matters referred to below. Okay. So there are two matters. One is related to inventory and another is related to trade receivables. First, let's come to inventory. As part of Hikari's service contract with the customer, it is required to hold an emergency inventory fuel reserve of 6,000 barrels. So emergency fuel has to be, there's basically reserve fuel has to be reserved for 6,000 barrels of aviation fuel. The inventory is to be used if the supply of aviation fuel is interrupted due to unforeseen events or such as natural disaster or terrorist activity. Okay. Now, this fuel has in the past been valued at the cost price of $15 a barrel. So basically, this is our cost of the barrel. The current value of the aviation fuel is $120 a barrel. That means that this is a current market price, or you would say the realizable value, current realizable value, or net realizable value, whatever. You can term it as anything, okay? Although the audit work is complete, the finance director of Hikari has now decided to show the real value of this closing inventory. That means that he's showing it at current value in the financial statements by valuing closing inventory at the market price. Basically, instead of valuing it at $15, he is valuing it at $120, which is a problem, of course, for all my students. I hope that you know why is this a problem. If not, I will definitely be explaining you. Do not worry. Okay, let's first come to the first question because this is related to our inventory only, right? If the inventory is adjusted according to the finance director's proposal, what would be the resulting impact on the Hikari's financial statements for the year ended this? So what assets will be overstated or understated? We need to see that. So let's see. Okay. So the first thing that should come to your mind, that should actually click onto your mind is that, I'm sorry for this. The first thing that should come to your mind is that your inventory should always be valued at the lower of cost and the net realizable value or the market value that we have. This is as per IAS 2. So if again reiterating that standards are very, very important. In almost all of my videos, I have referred to this, that standards play a very crucial role into your audit paper. And if you do not know these standards, it will be of a major issue. So here, if we see, as per IS 2, we know that the inventory should be valued at the lower of the cost of NRV. So our cost is $15 and our NRV is $120. So ideally, it should have been recognized at $15 only, but it has been recognized at 120. So that means our inventory is overstated, right? Inventory is an asset, and if asset is overstated, like the asset, if we see over here, is overstated. So the first point that we come to a conclusion that our assets have been overstated. And if our assets are overstated, because it is an inventory issue, right? Inventory issue, it should ideally be recognized at the lower of it. So that means our assets plus our profits both are overstated in our books of financial statements as per IAS 2. So the correct answer for this particular question should be option number 3, which is overstated and overstated. I hope that this was a very, very easy question. If you knew about IAS Two, you could just do it in like 20 seconds. It won't take you much time. So let's move to the next question now, which is our next question. Okay. So again, saying standards are very important, not just for your section B part, but also for your, for your section A part. Okay. Now let's read the next question. I think this is from here only. Okay. A member of the audit team has outlined the following audit procedures to be conducted on receivables. Okay, so receivables is the question. Let's read the question once. Let's read it. The trade receivables, let me just okay. The trade receivable balance has risen significantly and is now material balance. Okay. The results of trade receivable confirmation, which is circularization carried out by the audit team on balances as at 31st March as at May, are detailed below. I hope that you people are aware of what do we mean by circularization, and there are two types of circularization that can happen, right? So circularization is basically, if I talk about in simple terms, it is just a confirmation which is being sent to, third parties or the company's customers, just to confirm few balances. Basically, supposingly, I am one company and my client is ABC, XYZ. So I have in my financial statements, I have 100 rupees balance of ABC, 100 rupees balance of XYZ. So I will be sending circularization, letters or emails or something, just to confirm from ABC that in your books of accounts, is this the same balance? And similarly from this company also, is this the balance? Now there can be two types of, just explaining the concept. So for all the people who are not sure of the concept, in very simple language, so there can be two types of circularization that the auditor can do. One is a positive circularization and one is a negative circularization. So what happens in the positive one? He sent, like, I am the company. I have sent a message to ABC. I asked them that, hey, in my books of accounts, $100 is the balance. Is this the same balance that is there in your account? So if it is the same, he will reply. If not, he will reply. So in both the cases, the company will reply. So this is basically a positive, circularization. So basically, if your statement or your letter can say, if your account balance of $100 as of 31st March is correct, just let us know, like, please confirm if the account balance of $100 as of 31st May is correct or no by replying to this email. So if it is correct, they will reply. If not, they will reply. Simple. So you will get reply in either of the case scenarios. But in the negative one, it is always in the negative connotation. Basically, the letter or the email would now say that if your account balance of $100 as of 31st May is incorrect, only then reply to us. So we are just, concerned about the incorrection. So if it is correct, they won't reply anything to us. But if it is incorrect, they will reply to us. So this is the basic concept of positive and negative circularization and circularization also. I hope that this concept is clear to you. Not sure if the question is there in the ahead portions, but just wanted to tell you people about this part. Okay. Now coming to the question. Okay. So you have a customer named Korai Company. So balance as per the individual. So this is basically balance as per our financial statements, and this is basically balance as per the confirmation letter that we have received from the client. Okay. So K Company is fine. They're saying that as per us it is this much, and as per them also this is this much. Now, energy company, as per our balance, it is 35,000. As per them, it is 25,000. So that means that they have already paid us 10,000 rupees. They are saying invoice has been raised by 28th May. So they have raised an invoice. That means the balance will be showing upon before 31st of May. So maybe this is like a, maybe the balance is still pending and we will be receiving our balances very, very soon. Basically, this can be a scenario wherein it is in transit. It is still in transit. The payment is still in transit. Okay. So next one is next fuel company. As per us, it is 60,000. As per them, it is 45,000. So there's a difference of 15,000. They're saying that payment made by check on 30th May. So they have made a payment on 30th May and our year end is 31st of May. So might be a case scenario wherein this is a cutoff issue, wherein we have not recognized it in the correct accounting period. Maybe we have recognized this 15,000 in the next period, whether, and it should ideally be recognized in this particular period. That is where the difference is coming. Basically, I'll explain you in a simple language. Okay. So basically, in our 2005 books, the balance was 60,000, and the company has already paid us. They are saying, as per them, now the balance for the next financial year, which is for this, is 45,000, because they've already paid 15,000 when on 30th of May. So maybe we have not recognized this 15,000 in these books and this books, and we are recognizing in this one. So now this is an issue for the next year. So this is a cutoff issue because this payment should ideally come in 2005 books, but we are recognizing in the next books of accounts, right? So this is a possible situation of cutoff issue. Okay, so this is a possible situation of cutoff error. I hope that you people know what does cutoff error generally mean. This is a very common assertion that we test in our, when we are doing the audit procedures. Okay. Next thing is M company 55,000. So they are clear, but they are saying a balance of 20,000 is currently being disputed. So there's a dispute currently, and this company has not replied to us. Okay. Let's see. Let's read the question. Okay. A member of the audit team has outlined the following audit procedures to be conducted on receivables. Okay, so these are the procedures. Which option correctly identifies each of the following procedures as a substantive procedure or test of control? Again, a very, very common mistake or doubt or question people have is the difference between procedures and test of controls. So if I explain to you in a very simple language, basically test of controls check your processes. If your processes are working fine or no, how things are being done, how are they being done, and the processes and the systems are working fine or no, right? But the substantive procedures focus upon our results. They focus upon our figures. What are the figures in the financial statements? What are the amounts in the financial statements? What are the transactions happening in the financial statements? And they're basically concerned what has been done in the company, right? What has been done. So this is the basic difference between a test of controls. Test of controls basically look at your processes and how the controls that the company is putting into place in order to minimize a particular risk, how are they being followed? Whereas the substantive procedure is more related to your figures and results. What is the final result that is coming about? What are the invoices there? What are the amount of that? Is it correct? Is the valuation correct? Is the accuracy? All of those areas. Okay. So this is the basic difference between them. So now we need to identify out of these three statements, which is test of control and which of these is a substantive procedure. So I hope by my explanation now, I'll just write over here also so that it's just easier to refer. So if it is a TOC, we look how things are being done. And if it is a substantive procedure, we'll be looking what has been done. Okay. Let's move forward. Okay. So let's read the question first. Okay, just a minute. Yeah. Review the age receivables report. So we are reviewing the age receivable reports to identify any slow moving or old balances. And then we will be discussing the status of these balances with the credit controller to assess whether they're likely to be paid. Again, here, now we are most concerned about the amounts and the balances and all of those things, right? Because we're talking about the balances and then we are confirming it whether we are to receive these or no. So this is a substantive procedure, right? Because what has been done, we are looking about that and the balances also. Review a sample of customer standing data to ensure that discounts or invoices are approved and updated. This is a possible test of control. Why? Because we're looking at the process, that what is how are they, sampling, how are they reviewing the standing data, how are they putting up the discounts in the invoices, and they're updated or no. So this is how the system is working. So this is a test of control. Last one is recalculation of the allowance of the doubtful debts to confirm the arithmetical accuracy. Again, this is a substantive procedure. We will definitely be able to identify this one, right? So let's see if this is an option. So 1 and 3 is substantive procedure, this one. And 2 is the, yeah. So we have option number A as correct option. I hope that this was clear. Very, very simple. If you know the correct difference between these two, you'll easily be able to do this particular question. It's not very, very tough, guys. It's not tough. Okay. So let's move to the next question now. Let's quickly jump to the next question. Okay. Okay. Which of the following, just okay. Which of the following statements in relation to the results of trade receivable circularization is true? Okay. No further audit procedures, so I'll just put it down. No further audit procedures need to be carried out in relation to the outstanding balances with K company and Mizo company. Let's see. K company, of course, we do not need to do anything because our balance match. So, of course, we do not need to do anything. But they're also talking about Mizo company. So, Mizo company, we have a dispute. So, of course, we need to do further audit procedures, further follow-ups, basically, to be able to identify what is the dispute, right? So this cannot be the correct answer. This is a false statement. Next, the difference in relation to E company. Okay, E company. So in E company, we talked about that there can be a timing difference because they have already raised an invoice on 28th of May, right? So there can be a timing difference between this. The difference in relation to energy represents a time exactly. So exactly timing difference and should be agreed to the pre-year end invoice. This is a pre-year end invoice which they have raised on 20th of May. So of course it is a timing difference. I think this is the correct answer, but then we'll also read the next question, next parts also. The difference in relation to next fuel company represents a timing difference. Okay, so next fuel company payment made. Okay, no, this is not a timing difference. This is a cutoff issue as I talked about because they have already made a payment by check on 30th of May, right? So this represents a payment in transit. This is basic, not a transit. This is actually a cutoff issue which has arisen in the books of accounts. Maybe a cutoff issue. We are not very sure of it, right? Because the cash has already been received pre-year end and this will represent a cutoff issue. Maybe because this is already pre-year end, right? So again, a false statement. Due to the non-reply, the balance with the Infinity company. Okay, so no reply cannot be verified and a different customer balance should be selected. And no, 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 no. Of course, if we have not been able to get a reply from them, there has to be some other procedures that we need to do. We cannot just leave and get away with it, right? We need to actually use some other procedures to be able to get the reply from them. So, of course, this is not true. So, second part is absolutely correct. Let's move to the next question. Okay. Which of the following strategies, they've given strategies to us, should give an auditor the strongest? So of course, now please focus on this particular word, which is strongest, because all of these can be an answer, but we need to see the strongest assurance as to the existence of the trade receivables year-end balances. Existence basically whether they exist in our financial statements or no, whether this particular trade receivable balance actually exist in our, in the system or no, in a company with weak internal controls over the sales and trade receivables functions. Okay, carrying out a positive circularization of receivable balance in respect to the year-end balances. Okay, so now few minutes back I explained to you what do you mean by positive circularization. So positive circularization, you will anyway get a message from them. So in my opinion, this is the most correct option. Like this can be one of the correct options. Let's see the next ones and then we'll figure it out if this is the correct answer or no. Carrying out a negative circularization of receivable balance in respect to the year-end balances. Okay, so if you have understood the concept which I just explained, you will get to know that this will be a wrong answer. Why? Because in this case scenario, we'll only be getting a reply from them if the balances were incorrect. right? If they were correct, how will we get to know that that our the balance actually existed? Because only if the we will be only getting the reply if the balance was incorrect. So this cannot be the correct answer, right? Next statement is confirming receiver balance by agreeing to sales invoices authorized by delivery notes and valid order. So in this particular case, if we are testing, if we are if we are seeing the documentation, basically the sales documentation, they do not take into account the methods of payments. This is not a payment thing, right? We cannot check the existence of a trade receivables by checking the sales invoices and all of these things, the delivery authorizations, because of the payments, right? So does not take into account into the payments. And then the last one, confirming that a credit worthiness check is carried out by the credit controller for all the new customers. So this is actually a test of control. If you know, this is, by reading it, you will get to know that this is not a procedure or the assurance or the existence for the existence that we're doing. This is a test of control. So the most correct answer is positive circularization, because if it is correct, we will get a reply. If it is incorrect, we will get a reply. If it is correct, that is that in either of the case scenarios, we will get to know that yes, this balance actually exists in our financial statements and it is correct, right? So the first part is the most relevant option. Again, you just need to see what is the most relevant option, and just need to then segregate and just need to see which is the most relevant option out of the others, right? Just need to do that. Last portion, last question actually. Let's see. Okay. Hikari has sourced external finance for the first time during the year. The financial statements show non-current liabilities in relation to the loan of this. So he has taken a loan of this much during the year. Which of the following procedures should be performed to confirm the loan liability? So we need to confirm the amount of the loan liability in this particular case. Okay, let's see. Review directors board minutes for evidence of approval for the external finance. So this is not, this is here we're just confirming if they if they can take a loan finance or no. So this is basically not confirming the amount, this is confirming the existence of the loan. Basically this can also be a test of control, but this, if you're considering is it as a procedure, this will be testing the assertion of existence and not the assertion of the accuracy or the confirmation of the loan liability amount. So this is not the correct answer. Agree the loan amount payments recorded in the general ledger to the bank balance to confirm the amount that has been paid. Of course, this will be the correct answer, because here we are talking about repayment and all of those things, right? So if we get to know what is the amount of the repayment, we'll be definitely be able to confirm the loan liability that we need to pay at the year end. So second is definitely one of the correct options. Let's see. Just a minute. Yeah. So second is definitely one of the correct options. Agree the year-end loan liability balance to the bank confirmation letter. Again, here, because we're confirming from the bank, bank is confirming us the amount of the loan. So of course, it will then be able to, we will be able to get the loan liability balance towards the end of the year. So again, this can be one of the potential answers. Let's see. Compare the loan liabilities as a year end to balance in the previous year. So this is a new loan that we have taken. So this new loan will have a closing balance, of course, but then won't be having an opening balance, right? So if we cannot compare it to the previous year because there's no opening balance only. This is a new loan that we have taken, right? So this cannot be the answer. The answer is 2 and 3, by which we are confirming the amount of the loan. So I hope that this video was really helpful for you. You were able to get your answers, get your concepts also cleared by me. And if you have any doubts, please feel free to reach out to me via comments or via DM on our Instagram page. And I will be seeing you in the next question of case study number 3.